Hey, what's up? Okay, real quick. Maybe you've heard stories of people making millions overnight in the stock market? Ever wonder how they actually pulled it off? Sometimes it's not luck. It's not genius. It's just cheating. Imagine your friend Bob is playing poker, but he's got a secret camera that shows him everyone else's cards. And somehow he still denies cheating. That's basically insider trading in a nutshell. Except instead of poker, it's the stock market. And instead of chips, it's millions of dollars. And instead of your friend Bob, it's, well, probably still Bob. Bob's shady like that. So buckle up, because today we're diving into the slippery, sneaky, totally not okay world of insider trading. Section 1. What is insider trading? Insider trading is when someone uses secret, not yet public information to trade stocks or securities and make money unfairly. It's like knowing the answer to a test before it's handed out and betting your lunch money on who will fail. Now, to be clear, not all insider trading is illegal. Executives can buy and sell their own company's stock legally, as long as they report it and don't use secret info. The bad kind? That's when someone uses private information, like a company is about to announce a huge loss. A merger is about to happen. The CEO is going to resign tomorrow and it's not public yet. And then that person buys or sells stock before everyone else knows. Unfair advantage, right? Let's break it down further. Section 2. Key elements of insider trading. For insider trading to count as illegal, a few spicy ingredients need to be in the mix. Material information. Something that could actually affect a company's stock price, like, we're going bankrupt. Big deal. Versus, we're switching to a new coffee brand in the break room. Not exactly earth-shattering. Non-public info. It's gotta be a secret. If it's on X already, too late. But if it's just a quiet whisper between the CEO and his cousin Steve, oh yeah, that's hot. And illegal. Gossip. Duty or access. The person trading has a special relationship with the company. They're an executive, an employee, or someone close who's not supposed to spill the beans. Intent to benefit. They acted on the info to gain something, usually cash, but sometimes reputation or favors. Put all that together and welcome to Crime City. Let's see how this all plays out in real life. Section 3. How does insider trading actually work? Let's go back to Bob. Bob works at a tech company. One afternoon, he overhears the CFO whispering in a conference call. Yeah, the new phone exploded during testing. We're delaying the launch. Bob's eyes widen. He knows the stock's going to drop once the news goes public. So what does he do? He calls his buddy Alice up, who doesn't work at the company, and says, hey, just a feeling, but you might want to sell your shares. Like, now. Alice sells, avoids a huge loss, and later buys the stock again when it's dirt cheap. They split the profits over tacos. Congrats! That's insider trading. And yes, Bob just made a one-way reservation to SEC investigation land. Sometimes it's even more ridiculous. Executives might text friends or tip off family, or someone overhears something in the elevator and uses it to trade. The more you learn about insider trading cases, the more they feel like a bad high school drama. Section 4. Examples of insider trading. Example 1. The classic offenders. Alright, imagine you're in a secret WhatsApp group planning a surprise birthday party. Some people get the inside scoop early, and some are supposed to stay clueless so the surprise works. Now imagine a few of those people leak the party info and use it for personal gain. Welcome to the world of insider trading. Company director. This guy's like the head of the party planning committee. He knows early if the cake is ruined, the balloons popped, and the singer just canceled. But before that info is shared with the guests, he quickly cancels his own food order because he knows the party's about to flop. In the stock world, that's like dumping shares before bad news goes public. Boom, that's illegal. He used secret information to protect himself. CEO. Now the CEO, he's like the host who knows the party's off because there's a leak in the ceiling. But instead of warning everyone, he quietly tells his family not to bother buying any gifts. In the stock market, this is like the CEO knowing profits are crashing and selling his shares before the public finds out. Result? Hi, this is the SEC knocking on your door. Bank officer. The banker's like your friend who works at the party supply store. He hears a big surprise wedding might be combined with the birthday bash, like a merger. So he rushes out and buys stock in a flower company before anyone else knows. Not cool, and yep, jail time if caught. Random investor. This one's your friend who's not even in the party group. but they overhear it from their girlfriend who heard it from her cousin who works for the catering vendor. Even though he's not an insider himself, if he acts on non-public info and profits from it, still illegal. Imagine everyone's playing a fair trivia game. This guy got the answers from the host before it started. Doesn't matter how he got them. If he uses them to win, it's cheating. So with the surprise party and secret group chat analogy, you can see how insider trading works and who the usual suspects are. If you like this kind of explanation, let's jump into the spicy stuff. The famous insider trading cases. Grab some popcorn. Example 2. Famous cases. AKA real-life insider trading drama that belongs on Netflix. Now we're leaving the group chat and heading straight into a mini-series. Because these aren't just any cases. They're real stories with drama, power, and yes, prison time. Martha Stewart, Queen of Home, but not of Wall Street. Yep, that Martha Stewart. The queen of cooking and home decor who's always on TV saying, easy and elegant. But in 2001, her life flipped from cozy kitchens to courtrooms. What happened? Martha had a doctor friend who just so happened to be an advisor at a biotech company, ImClone Systems. One day, that doctor found out the FDA was going to reject a major drug. ImClone's stock price? About to tank, he told his broker. The broker just happened to tell Martha, and Martha quickly sold her shares before the news went public. Translation: she got insider information before the public. She used it to sell and save her money. SEC: excuse us, ma'am. Strangely, she wasn't charged directly for insider trading. She was charged with lying to investigators and obstructing justice. She did 5 months in prison, and her public image took a serious hit. Moral of the story: sometimes it's not just what you know, it's how hard you try to cover it up. Raj Rajaratnam, the billion-dollar network. If Martha acted solo, Raj built a whole spy network.
Wow.
He was the founder of Galleon Group, a giant hedge fund, and he had insiders everywhere like a Wall Street spy thriller. He got tips from top execs at Intel, IBM, Google, you name it. These weren't rumors. These were real, non-public scoops. He used them to craft his trading strategy. Over the years, he made hundreds of millions of dollars. But eventually, the FBI and SEC got suspicious. So they tapped his phone. What they heard? Pure gold. In the end, 19 people were arrested. Raj was sentenced to 11 years in prison, one of the longest sentences ever for insider trading. All because he played the stock market with VIP-level intel. Insider trading isn't just about knowing something first. It's about using that secret info to win in a game that's supposed to be fair. And as we've seen, whether you're a celebrity or a billionaire, if you cheat, there's someone out there ready to knock on your door. Section 5 is insider trading legal. Okay, so here's the confusing part. Not all insider trading is illegal. If a company exec buys stock in their own company, it's legal, as long as they follow the rules. They must report the trade to the SEC. They can't use non-public info. It has to be during a set trading window. Think of it like this. Legal insider trading is like baking cookies with a recipe. Illegal insider trading is like stealing cookies from the oven before anyone else knew they were ready. Same cookies, way different vibe. Section 6. Why is it illegal? 3 big reasons. It's unfair. Regular investors like you, me, and Grandma don't have secret info, but insiders do. If they act on it, it's like cheating in a race with rocket boots. It damages trust.
Oh my God.
People stop believing the market is fair. If the system's rigged, why even invest? It hurts the economy. If people think the stock market is just a casino for rich insiders, they take their money elsewhere, which means less investment, slower growth, and more ramen for everyone. Section 7. Why is it hard to detect and prosecute? Oh boy, it's sneaky. Insider trading doesn't leave a trail like stealing cash from a safe. You don't get receipts that say, Bob used secret info to make $20,000. Love the stock fairy? It's often done through whispered conversations, burner phones, friends of friends, offshore accounts, sudden lucky trades right before big news. To catch it, regulators like the SEC have to dig deep. They track phone records, emails, patterns in stock trades, basically playing financial detective with a PhD in trust issues. Section 8. Impact on the market and investors. Imagine you're at a blackjack table. You're playing fair, making smart bets. Suddenly, you realize the guy next to you knows every card before it's dealt. Would you keep playing? That's how regular investors feel when insider trading happens. It shakes the foundation of trust. Stock prices become less about real value and more about who knows what. And when confidence disappears, so does the money. Markets become volatile, investments dry up, and businesses suffer. Section 9. How to prevent or avoid insider trading. Here's what companies and regulators do. Trading windows. Execs can only trade during specific periods, after earnings are public. Blackout periods. When sensitive info is floating around, no one trades. Period. Employee training. Hey Bob, don't leak stuff to your cousin. Surveillance tools. The SEC uses algorithms to catch weird patterns, like someone buying thousands of shares hours before a surprise merger. Whistleblower programs. Snitching actually pays. The SEC rewards whistleblowers who help crack insider trading cases. So, yeah, Big Brother is watching. Especially if you trade right after whispering, "Don't tell anyone." So, in conclusion, insider trading is like using cheat codes in a multiplayer game. Sure, you might win, but you ruin it for everyone else. It's unfair, it breaks trust, and it turns the stock market into a backroom poker game with mirrors and magnets. Stay informed, trade clean, and maybe tell Bob to chill with the secret tips, yeah? If you want me to make other videos explaining these topics, please like and subscribe. Thanks for watching.